Understanding money market accounts and their alternatives. Money market accounts, MMAs, are an increasingly popular option for individuals looking to save while also having access to their funds. They provide a mixture of features typically associated with savings and checking accounts, but with nuances that can significantly affect a depositor's returns and liquidity. In this article, we will explore money market accounts, their features, and 4 alternatives, providing you with a comprehensive understanding of these financial products. Money market accounts versus other account options. Feature money market account, savings account, checking account, certificate of deposit, CD, money market mutual fund. Interest type variable, or none, fixed variable. Federally insured, yes, no. Checks limited, no, unlimited, no, limited. Debit card, yes, no, sometimes. Source, Investopedia. Savings accounts. Savings accounts are often seen as a staple of personal finance. While they generally offer lower interest rates compared to MMAs, averaging about 0.45% in mid-2024 versus an MMA's average of 0.66%, they tend to have lower barriers to entry, such as minimum balance requirements. Unlike money market accounts, savings accounts primarily earn interest through their dollar amount held, but they cannot invest in short-term securities like CDs or commercial paper. Key takeaway: if you prefer no minimum deposit or lower overall fees, a savings account may be more beneficial than an MMA, especially if you're not banking a substantial amount. Checking accounts. Checking accounts are highly liquid financial tools that allow for unlimited transactions, enabling you to make purchases and pay bills easily. Traditional checking accounts tend to offer little to no interest, but they provide direct access to your money without withdrawal restrictions. With the introduction of new federal regulations in 2020, banks lifted transaction limitations traditionally placed on MMAs. However, some banks may continue to impose their own restrictions on how often your money can be accessed. Key takeaway: checking accounts excel in transaction flexibility but typically lack significant interest compared to MMAs and savings accounts. Money market mutual funds. Money market mutual funds are unique from traditional money market accounts. These investment vehicles are typically offered through brokerage firms and are not insured by the FDIC or NCUA but generally invest in low-risk, short-term securities. While they often provide better interest rates than checking or savings accounts, they also come with some risk, including market fluctuations. Investors should be aware that while these funds do not offer the same guarantees as MMAs, they often provide higher returns. However, accessing funds may also come with limitations on withdrawals or checks. Key takeaway: consider money market mutual funds if you're comfortable with a slightly higher risk in exchange for potentially greater returns. Alternatives to money market accounts. If you're evaluating whether a money market account fits into your financial strategy, consider the following alternatives. 1. Passbook savings accounts. These accounts typically have no minimum balance and are insured, though they usually come with lower interest rates. 2. High-yield savings accounts. Offered by many institutions, these accounts may provide better rates compared to MMAs while still being FDIC insured. 3. High-yield checking accounts. Similar to high-yield savings accounts, these can offer competitive interest rates while allowing unlimited transactions, though often with strings attached. 4. Certificates of deposit, CDs. If you can commit your money for a certain time frame, CDs typically offer higher interest rates in exchange for locking your funds and may come with penalties for early withdrawal. Are money market accounts safe? MMA safety often depends on the financial institution's stability and the FDIC's insurance, which covers up to $250,000 per depositor per bank. This coverage extends to all insurable accounts held at the same bank, including checking, savings, and CDs. For those with balances exceeding this insurance cap, diversifying accounts across multiple banks is a prudent strategy. Benefits and disadvantages of money market accounts. Advantages. Higher interest rates, MMAs generally offer better returns compared to regular savings accounts. Insured protection, like savings accounts, MMAs are federally insured. Flexibility, many MMAs allow check-writing capabilities and offer debit card access. Disadvantages. Limited transactions. Although federal restrictions on MMAs have eased, banks may still impose their own limits. Fees and minimum balances. Some accounts may require a minimum balance or charge monthly fees for low balances, impacting overall returns. Complex terms. Rates can fluctuate based on market conditions, requiring depositors to remain vigilant. Conclusion. Money market accounts offer a mixture of benefits that can complement various savings strategies. However, it's crucial to assess your individual financial goals, weighing any potential drawbacks against the flexibility these accounts can provide. With various alternatives available, depositors have plenty of options to meet their savings needs. By carefully examining your choices, you can find the best financial product that matches your lifestyle and investment strategy.